Hey traders, welcome back to the weekly Forex Forecast. No video last week, apologies for that. I was a little bit under the weather, but we are back to normal this week. Last week was a very interesting week though, a lot going on. And the big thing from last week was the blockbuster US data we had coming out on Friday. Hot across the board, non-farm payrolls beat, the unemployment rate tightening, and we also saw wages coming out on a year-over-year basis, hotter than expected in the US. So why is this important? Well, because it drove bond yields up in the US, meaning that interest rates on a yield level, but also on a federal funds level, are likely going to have to be held where they are for a little bit longer than expected. And certainly more 50 basis point cuts have been priced out because of this hotter than expected US data. And as you can see in the markets, we had the double top coming in to euro dollar. We took out the high, we failed. Those of you who have done the GMT course will know this as a first degree breakout. We have a high, you get a breakout, and then it reverses back inside the breakout in the same candle. It's the weakest type of breakout you can possibly have, and in fact it did it a couple of times here at least. We then see the reversal, we break this, that means we got that confirmed double top in euro dollar. So now we have the technicals overlaid with the fundamentals. In other hotter than expected data coming out, yields going up, and then we get a technical reversal pattern in the euro. So what we're looking at here is very likely a near-term top in euro dollar, potential bottom in the US dollar index. And if we're going to see yields going higher, especially if we get continued escalation in the Middle East pushing oil up, because as oil goes up, bond yields in the US go up with it and therefore drag the dollar higher. It does look like, therefore, all things considered, we're looking at near-term top in euro dollar and a near-term bottom in the dollar index. There are some arguments to say that the data is massaged, over-exaggerated, faked, whatever you want to call it. However, as traders, the most important thing is the market is going to follow official data. So you can have all those discussions if you so wish, but don't try and argue with the data that comes out, because the markets will move on the official data. Okay, so moving on to the market selection, the portfolio selection part heading into next week, there's a couple of really key takeaways from the quantitative data that we're looking at here. The first is that the Australian dollar and the Canadian dollar are the two best long themes heading into next week, quantitatively speaking. First the Aussie, then the Canadian dollar. However, what's also interesting about this is that the Australian dollar and the Canadian dollar are commodity currencies. It means the demand for these currencies primarily driven through demand for commodities, imports, exports, or the difference between imports and exports. And as demand increases for commodities, demand for the currencies increases. This is why commodities go higher and the commodity currencies follow. So that is consistent with actually an inflationary or reflationary outlook. The markets are beginning to trade, at least in Forex. For now, we can discuss other markets in a second. But certainly in Forex, we're starting to see Forex markets trading on a more inflationary or reflationary regime. In other words, Forex markets seem to be trading around not a recession after the 50 basis point cut, although that could change, but certainly for now, a fear of a reacceleration of inflation, commodities going higher. So the third thing you would expect to see in that kind of inflationary regime is what? Commodities go higher, commodity currencies go higher, and then what happens? Rates in the US have to go higher as crude oil goes higher, copper goes higher, etc. And so you get the outperformance of the Australian dollar, the Canadian dollar, those commodity currencies, but also the US dollar with them. So you tend to see the commodity currencies and the dollar going higher as well, very much like in the big rally we saw in 2021. So going into next week, the third currency I would like to pair with this is in fact the US dollar. And although the US dollar in terms of its performance score down here is red, there is a big difference between the US dollar and all of these other performance wheels, which is that these are all showing momentum to the downside. You can see that on this red arrow. Whereas the dollar, the performance metrics in the US dollar, after being a very good short for quite a while, have now bottomed. We're starting to see the performance metrics internally increasing in a significant way to show this arrow as green. In other words, it's bearish but getting stronger, which is very often what you see on reversals or bottoms with currencies and markets in the hedge dash algorithm. So going into next week, it does look like first and foremost we're going back into, even if it's just temporary, we'll have to see, but we're going back into an inflationary regime or a fear of a reacceleration of inflation. And so with that, the Australian dollar, the Canadian dollar, and the US dollar to the upside are the three currencies I'll be looking at primarily. Versus the euro, because as the dollar rallies, you know, the euro, 57% of the dollar index suffers. And in fact, those kind of EU majors tend to suffer, generally speaking, when you get this kind of reflation, because the dollar goes higher, the commodity currencies go higher, and those EU majors like the euro, like the pound, tend to suffer. And also the yen and Swiss franc. So going into next week, I do like the Aussie, the CAD, and also the US dollar versus the euro to the downside. We'll also be looking at the New Zealand dollar to the downside. We have an interest rate decision coming out of New Zealand next Wednesday. I'm going to show you in today's video exactly how I plan to trade the New Zealand pairs around that. And the third one we're going to look at to the short side. Now you could probably pick out the yen or the franc to the short side versus these currencies if you like. But the third currency we're going to be looking at to the downside is the pound. And again, even though this is scoring pretty high in the performance metrics in absolute terms, we are starting to see the performance metrics peak and reverse. So looking forwards, we are likely to see this dropping from 31, you know, down below 10 into neutral territory and possibly even negative now because it's peaked. So to summarize what we're going to be looking at in today's video, we're going to be looking at EurAusd to the downside, EurCad to the downside, EuroDollar to the downside. We're also going to be looking at Aussie New Zealand to the upside, New Zealand CAD to the downside, and New Zealand dollar to the downside. And we're also going to be looking at the pound to the downside versus the Aussie. So pound Aussie to the downside, pound CAD to the downside, and pound dollar to the downside. Now, the other thing I like about pound shorts this week is that, yes, the pound tends to underperform in a kind of inflationary or reflationary regime as the commodity currencies go higher, yields go higher, the dollar goes higher with it. But also, last week we had Bank of England Governor Bailey coming out fairly unexpectedly in an interview with the Guardian newspaper saying that he does think the Bank of England are going to get more aggressive, or at least tabled the idea of the Bank of England getting more aggressive in their rate cutting. So this is why we saw the big sell-off last week in the pound, and combined with the fact the pound underperforms in a more inflationary regime, you know, this catalyst is likely to follow through into this week as well. Okay, so kicking off the watch list, as always, with crude oil. Now, crude oil this week is something I would rather be on the long side. We do have tensions rising in the Middle East. We have seen an escalation where Iran has sent more missiles over into Israel, and Israel has vowed to respond to this. And we also have coming up on Monday, what is Monday? Monday is October the 7th, so it is the anniversary of the attack on Israel. Governments do like to do things symbolically. In my experience, I would not be surprised to see some kind of retaliation taking place on Monday. And any kind of escalation in the Middle East is going to continue to see crude oil being pushed higher. As crude oil gets pushed higher, yields in the US will continue to move higher with it, because as crude oil goes up, this is inflationary, and therefore rates have to go up in the future. And this will be bullish for the dollar. So another reason why I do think dollar longs are definitely something we should be focused on next week, and probably over the next few weeks. So going into next week, I only on balance want to be long crude oil because of these risks around escalations in the Middle East and a potential retaliation, you know, from Israel on Monday, October the 7th, the anniversary. So what I'd like to see is I'd like to see crude oil pulling back. Ideally, for whatever reason, if we can get crude oil breaking below the 68.80, crude oil becomes oversold intra-week, and this would be an area I would be looking for a 1 or 2 day reversal to the upside. And of course, if you buy crude oil and there's an escalation, you know, the spike to the upside will be in your favor rather than in your face. So I cannot sell this asset next week because of this. The second thing I'll be looking for, and this is unexpected, but if for whatever reason we breach the first lower bound, we come all the way down to the gold level here and we breach this at the 63.16, any market move below this will mean that crude oil is extremely oversold intra-week, and I will be looking again for a 1 or 2 day reversal to the upside, whether I'm long or not. You know, sometimes I'll get long here, it will move against me unexpectedly, I will buy it again here, and as it bounces, I tend to cut this for break even. This is something I do all the time. In fact, did again last week with a couple of trades that didn't work in real time with GMT members. Now, if we break through here and we start to make our way back towards the 68.80, but we don't test it, you can find that the market pulls back below its moving average, and instead of taking out the lower bound, it breaks back above it. And this is where you get that kind of bear flag, in this case, set up. See how it breaks below it, pulls back into it and sells off. It does it again here, pulls back into it, sells off. You can look for the same thing. Look for it to break back above the moving average so it corrects, and then you get the correction breakout. And then as it tucks into it, you can look for that long opportunity intra-week into the 80.09, great profit taking opportunity to the upside, because crude oil becomes overbought intra-week above there. So again, great opportunity to book profits. These are the only three setups I would consider looking at in crude oil next week. Again, I can be a buyer or do nothing in crude oil next week. And keep an eye out on Monday for any potential retaliation. It's not a guarantee, but any potential retaliation on the anniversary of October 7th. Okay, so kicking off the Forex markets with EurAusd. This is top of my watch list heading into next week. Why? Euro 57% dollar index as the dollar rallies, and we have US CPI coming out next week. So if we get, as we've been seeing, hotter data coming out, if we get hotter than expected print, it's going to boost the dollar again. The euro will suffer from this. And inflation comes with higher commodity prices, and also we get the commodity currencies more in demand. So I really do like EurAusd to the downside next week. Any pullback in this market towards, and you can see we've already started to break above the moving average. So I'll be looking for this to continue next week, to head up, breach the 1.6336. We then become overbought intra-week, and I will be looking for double top reversals or any kind of reversal pattern on lower time frames. Looking for this to reverse, usually 1 or 2 days reversal you get from these overbought and oversold levels intra-week. The second thing I'll be looking for is if unexpectedly, whether I'm short here or not, if we breach the 1.6519, and of course, if we breach this, necessarily it means we've breached the first one as well. So I may already be short and just trying to risk manage a losing position. But if, as unexpected as it is, we take out the second upper bound, this is the second place, whether I'm short or not, I'll be looking for a 1 or 2 day reversal. And the third thing, of course, is I would expect the moving average to follow this up. And again, if you get that break back down below the moving average intra-week, look for the market to pull back, settle into the moving average, breaks down below it, settles into it, and then you get the move away. You can look for that bear flag setup intra-week in that case down to the 1.5970. Next is EurCad. I can either be short this or do nothing. Any escalation in the Middle East next week pushes crude oil higher, will benefit the Canadian dollar. So what I'd like to see is I'd like to see this market pull back. Ideally, I'd like to see this breach the upper bound at the 1.5023. We then become overbought intra-week in a market that I want to be short, and you can see this is actually really nice momentum to the downside. This should just be considered, unless we break this high, we should be considering this just as a pullback or correction. I'm going to be looking above this level for a 1 or 2 day reversal to the downside. If we break through here and we take out the 1.5142, again, in this case, this would probably mark a reversal in the currency pair. So it's unexpected. The markets aren't reversing all the time. Usually they're moving in the same direction. And then after a period, maybe of 7-8 weeks, they will reverse and you'll start to see second upper or lower bounds taken out. Usually takes a catalyst as well. So if we breach this level, I will be looking for a 1 or 2 day reversal to the downside from here, whether I'm short already or not. And the third thing you can look for is you break above the moving average, and again you get that opportunity. If it breaks back down below it, so you get a correction, and then you get that kind of corrective breakout, pulls back, nestles into the moving average. And you're not going to get this setup perfect every time, but out of a number of them, you will start to see these developing in a number of these currencies. And that gives you your bear flag setup down towards the target next week at the 1.4786, where once you trade below there, you become oversold intra-week. So great profit taking opportunity in EurCad. And the third euro pair here we're looking at is euro dollar. Now, as we start to see crude oil going higher, this drags yields higher, and therefore the dollar goes higher. And the euro, suffers, especially relative to the dollar. So I'm only looking for shorts next week in this market. I cannot be a buyer of this market. I'd like to see euro dollar pulling back, breaching the 1.1085. We become overbought intra-week. Then I'm going to start, once we become overbought, I'm going to start looking for potential reversal patterns on lower time frames for a 1 or 2 day reversal. Pretty much usually all you get within the week, I'm trying to capture 2 out of 5 days worth of movement roughly each week. If we start to break above here and take out the second upper bound at the 1.11956, this would be the second place I'll be looking for a 1 or 2 day reversal, whether I'm short from above here or not. you know, whether this is just an initial short. So I'm not short here, pushes up, takes this out, I'd be looking for a short. And the third thing you can look for, and by the way, the only way I really see it taking out this second upper bound next week is with a very, very soft CPI print. You usually need a catalyst to test these second upper and lower bounds. So without that, I don't think we're going to see a test of this upper bound, but with hotter than expected data recently, I would not be surprised to actually see hotter than expected inflation as well. And the third and final thing you can look for is, because it can only be a seller, is if this pulls back and we start to trade above the moving average, again, you can look for that kind of bear flag breakout where we sell off, the moving average tracks with it, you get this kind of nestling in, and then you get the follow through into, in this case, the 1.0865, which is a great profit taking opportunity next week in EurDollar to the downside. Moving on to the pound pairs, and again, I liked that pound short theme heading into next week because of the dual aspect of the pound underperforming in inflation regimes as the dollar goes higher, and also the Bank of England governor coming out talking about a more aggressive cutting policy. So with that, any pullback in this market, I want to see this pullback, and I want to see this breach the 1.9512, because then a market that I'm looking to be short becomes overbought intra-week. I'll be dropping down to lower time frames, looking for a 1 or 2 day reversal to the downside. If it breaks through here for whatever reason, although I don't expect it to do this, if as a plan B it breaks through here and breaches the 1.9707, it becomes extremely overbought intra-week, and I'd be looking for a 1 or 2 day reversal from here as well, whether I'm short already or not. And the third thing you can look for, we're already starting to break above the moving average, so you can look for that intra-week breakout. If it fails to pull back and we just see real weakness and it breaks down, look for that break, pull back into the moving average, and that sell off. And that gives you your nice kind of bear flag setup intra-week. If we get a kind of a fast market, we don't pull back and turn overbought. You can look for the lower bound here at the 1.9121. That's where we turn oversold intra-week on pound Aussie. Great profit taking opportunity for any intra-week shorts. Next is pound CAD. I can either be short or do nothing. I cannot buy this market next week. Really nice momentum to the downside. Double top reversal in the 4 hours here. What I like about this is if we pull back and we turn overbought intra-week above the 1.7971, it's also a pullback and a retest of the underside of this double top reversal. So any breach of this area, I'm going to be looking for a 1 or 2 day reversal to the downside. If for whatever reason, although it's unexpected, we breach the 1.8131, take out this high, this is the second place. I'll be looking for a 1 or 2 day reversal to the downside. Whether I'm short here or not, this is just maybe an initial entry. If I'm not already short, this is the second place I'll be looking for a short. And the third thing you can look for is you start to break above the moving average. The moving average starts to turn. There you get that correction, and then you break out of that correction. And as that happens, the moving average follows it down. You get the bear flag set up into the lower bound next week at the 1.7651. And the final pound pair is pound dollar. I can either be short or do nothing. I cannot buy it. What I'd like to see is I'd like to see this market pulling back, breaching the 1.3274. So this would actually be very similar to what we just looked at, especially if we can pull all the way back. This would be a stair step into the low over here, which is the double top low. We come down, we try to break out, we fail. We confirm it with momentum below this low. So any pullback, we trade above the 1.3274 and trade into this low. That's going to be a great setup for a reversal. I'll be looking to capture 1 or 2 days to the downside. If for whatever reason we get some kind of unexpected catalyst, maybe on Thursday we get a very, very soft CPI print out of the US, which again, I think is probably unlikely based on the fact the rest of the data came out hot. But if we get that, we always want to be prepared. If we trade above the 1.3427, we're extremely overbought intra-week. It's the second place. I'll be looking for a 1 or 2 day reversal to the downside, whether I'm short from above here already or not. And the third thing is, as always, if you start to break above the moving average, you can look for that breakout back down below, and then look for the bear flag set up into the moving average and the sell-off down to next week, the 1.2968, great profit-taking target for any intra-week shorts in pound dollar next week. Wrapping up the Forex universe with the New Zealand pairs. Now, the New Zealand dollar short theme does come with an interest rate decision next week. And on Wednesday, the RBNZ are expected to cut 50 basis points. So I'm going to be looking at each of these markets after the RBNZ interest rate decision, and I'm going to be looking at all three of them in the same format, which is this. I expect the New Zealand dollar pairs to chop around into the RBNZ interest rate decision. If we get the cut as expected, or for whatever reason we have a kind of non-event interest rate decision on Wednesday, then I'm going to be looking for the Aussie dollar just as any kind of normal setup. In other words, I'll be looking for a bit of volatility to take out the lower bound. In this case, stair-stepping this prior high. Look at this. This is a nice one. So we turn oversold intra-week below the 1.0940. And if we start to trade below here, I'm going to be looking for reversal patterns for a 1 or 2 day reversal back inside the range next week. If instead of a neutral outcome, we get a very bullish outcome for the New Zealand dollar, you can skip the first lower bound. Let's say they come out and they don't cut rates at all, or let's say they come out and they cut only 25 basis points instead of the expected 50. Because of that, we actually see the New Zealand dollar rally. The Aussie breaks its first lower bound, takes out the second lower bound. So now we have a bullish catalyst for the New Zealand dollar, trades this market below its second lower bound. It becomes extremely oversold intra-week. I would then look for potentially 1 or 2 days reversal to the upside, back inside the bigger range here in Aussie New Zealand. And the third and final thing you can look for is this market to correct into the moving average, maybe even breaking through it. And then we get the opposite. We get a very bearish outcome for the New Zealand dollar. Maybe they cut 50 basis points, say they're going to do another 50 basis points or whatever. In that scenario, instead of taking out the lower bound, we can see the market immediately rally. This happens very often on these kind of interest rate decisions. Then you get that kind of intra-week bull flag opportunity as it pulls back into the moving average, and then you get that intra-week long opportunity into the 1.1121. So 3 different outcomes there. A neutral outcome, you can look for the first lower bound. Again, I can either be a buyer or do nothing. I still can't sell this market next week. But a neutral outcome or a bit of a non-event, look for the first lower bound as normal. If you get a very bullish outcome for the New Zealand dollar, you can look for a breach of the second lower bound. You can just filter this out. You know, again, if they only cut, say, 25 basis points, and you can look for the initial position down below this level. And if you start to get a very weak New Zealand dollar and you get the initial breakout, you can look for the bull flag setup intra-week in this market. We're going to look at the next 2 markets in exactly the same way. Next is New Zealand CAD. I cannot buy this market next week. I can only short it. So what I want to see is I want to see this market pull back. In a non-event, you can look for the market to continue to correct after Wednesday into the 0.8451. In this situation, I would be looking for a 1 or 2 day reversal to the downside. If you get a very bullish outcome for the New Zealand dollar, again, if they only cut 25 basis points instead of 50, you can see this market breach the upper bound, drive all the way into the second upper bound, and this would be, on a bullish outcome for the New Zealand dollar, the place I would look for a 1 or 2 day reversal. Again, I can either short this or do nothing next week. I can't do anything else. And the third thing you can look for is New Zealand CAD starts to trade back towards its upper bound, and then you get a bearish outcome for the New Zealand dollar, and you can look for that bear flag setup into the moving average, in this case down to the 0.8268. And finally, we have New Zealand dollar. Again, I can either short this or do nothing. I cannot buy this regardless of the outcome of the RBNZ next week. So I'd like to see this market pull back. If we get a non-event and the event passes, you know, without anything really happening, I'll just be treating this as a normal opportunity, looking for a breach of the 0.6249. We become overbought intra-week in a market that I'm looking for shorts. And we also take out this low, which again is the prior low down here after we failed to make the high. So it's the double top breakout. You see, we broke with momentum. So I would like to see us breach this, test the underside of this, and I would be looking for a 1 or 2 day reversal from above this level in the event that the interest rate decision is kind of a non-event or nothing really happens. If we start to break the first upper bound, and with a 50 basis point cut, you know, there's quite a lot of room for, you know, volatility either way. So if it's a non-event, then I'll be looking at reactively playing that, but I wouldn't be surprised to see some volatility. So if we get less than expected cut and we start to see the New Zealand dollar rallying, I would filter shorts from the first upper bound and look for this as a catalyst to trade into its second upper bound. Then you can look for an initial short opportunity from above this level where this comes back into the range by the end of the week. And the third thing I'll be looking for is post Wednesday's RBNZ interest rate decision. If you get this correction into the interest rate decision, as very often you do, and then we get a bearish outcome for the New Zealand, look for the sell-off the pullback into the moving average, and then you can look for that bear flag opportunity intra-week. Usually in the 4 hours, you just get one of these, and that's down to, in this case, the 0.6066. Great profit-taking target to the downside in New Zealand dollar next week. Okay, so wrapping up the video with gold and silver as always. Now, the difference this week with gold and silver is they're both still longs on balance, but with the dollar potentially bottoming, this is going to create a headwind for these markets now, whereas they had a weaker dollar as a tailwind before. It was helping push them higher. Now, it doesn't mean that they can't go up at the same time with the dollar, especially gold, but it is a risk, especially to silver longs, if we have a stronger dollar, and also if we have an escalation next week, maybe a retaliation from Israel on Monday, October 7th, or something like this. This is going to have an effect on silver, which is negative, whereas gold can actually benefit. So out of the two, I prefer gold longs next week. I probably will leave silver because of the risks, but we'll still look at silver anyway in today's video. So what I'd like to see is I'd like to see gold come back next week, breach the 2596.77, stair step this prior high, we pull back, we break, we come back and we retest it. And if we can breach this level, we turn oversold intra-week, we test this high. I'm going to be looking for reversal patterns for a 1 or 2 day reversal back inside the range. If for whatever reason, this is very unexpected and we haven't tested this to the downside for quite a while in gold, but if unexpectedly we break through, whether I'm long already or not, below the 2540.03 is the second place. I'll be looking for a 1 or 2 day reversal to the upside next week. And the third and final thing you can look for is, as we start to correct, you can look for the break back above the moving average, the pull back into it, and you get that kind of bull flag set up. In this case, the profit target to the upside next week would be the 2710.26, because above there you become overbought intra-week. And again, any kind of escalation in the Middle East could actually benefit gold, whereas silver may actually suffer. And finally then we have silver. Again, I reiterate it, I prefer gold longs, but if you are looking for silver longs, the opportunity where we become oversold intra-week is below the 30.67. If we breach this, especially if we come down, test this low or stair step this high, this is the area I'm going to start to drop down to lower time frames and look for those reversal patterns for a 1 or 2 day reversal back inside this range by the end of the week. The second thing I'll look for is if we break through here, whether I'm long already or not, below the 29.15, we become extremely oversold intra-week. So this is the second place I'll be looking for a 1 or 2 day reversal to the upside. And the third thing is, of course, if we start to, maybe later on in the week, we push back and we break above the moving average pulls higher, and then we nestle into it, you can look for that bull flag set up. The profit target, the upper bound, is the 33.72. Above there, you become overbought intra-week in silver. This is a great profit-taking opportunity for any intra-week longs in this market. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge platform is included with every GMT membership.